Hi, good evening. If you can hear me loud and clear, please type yes in the chat box right now. Okay, if you can hear me loud and clear, please type yes in the chat box right now. Okay, and provided you can see me also. Okay, good to go. Everybody can hear me right now. Okay. So good evening and welcome to our monthly Fit Person hangout. Okay. So today what I'm going to do is a bit slightly different from the usual Q&A. So the first probably 20 minutes or the half an hour, I'm going to talk about how do you find investment ideas. Okay. So I'm going to share with you how did I actually find all my ideas from and how do I look into them. Okay, so I'll go through that about half an hour, and the next half an hour I will go through all those questions that all of you have submitted. Okay, there's really a lot of questions, so I'll try to cover as many as possible. And if you have question live right now, you can just type it in the chat box, and I will catch up the questions later. Okay, so okay, so let's start off with finding ideas. So how do me Rusmin and we look for ideas? So there's a few places that we look for ideas. Firstly, we look for ideas in the newspaper. Okay, we look for ideas in the product around us. Okay, or we have a group of mastermind like an investor we meet regularly, and we also go through this screening to look for ideas. Okay, so now let me show you how do I use the screener first. Okay, so I'm going to talk about screener, then later I'll talk about the rest. Okay, so now I'm going to share my screen. Okay, can you see my screen right now? If you can see my screen right now, please type yes so I know that all of you can see it. Okay, cool. Okay, so what you're looking at right now is the CIMB screener. Okay, I've used a lot of brokers. I've tested every broker's screening tool. I realized that CIMB have the best screening tool. So every time when I screen for companies, right, I will use the CIMB screener. And moreover, when you open CIMB account, it's just free. Okay, so I use the CIMB account for screening. So basically, when you look at the CIMB account, you can see that they have many countries. This is one thing I like about them, because the other brokers, they only probably have a few countries, but for CIMB, they got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 countries. Okay, so most of these countries I invested in. I usually invest in Singapore, Malaysia, Thailand, Indonesia, Hong Kong. Okay, sometimes you look at Japan and the US. So these are the few regions that I look at, and I can just tick whatever one. So for instance, what I usually screen for, the typical time that I screen is I will click on this advanced. Okay, I'll click criteria, and I will always screen by ROE. Okay, so they only screen by the latest year. So I will screen by probably 10% ROE. Okay, so this is one of the method that you can screen 10% ROE. Okay, and I'm going to screen for debt to equity ratio less than 100%. Okay. Okay, so this is what I usually do when I screen for maybe value growth stocks, company that is growing, okay, or fast grower. Okay, they usually have very good ROE, and I don't want to put 15%. Why? Because sometimes certain companies, right, their depreciation very high. Actually the business is growing very fast. They are generating a lot of cash. Companies like BreadTalk, okay, they may have ROE below 15%. So you may miss out such company if you screen too high of it. Okay, so you see, after I did the screening of ROE and total debt to equity, right, or next one is total debt to equity. I will make sure that the company is not too overly leveraged on the debt. Okay, because I don't want to buy in the company that the company have chances to go bankrupt. Okay, so you see, after I screen, right, a lot of the companies actually the number of stocks actually went down. So you can see that Singapore left with only 128 stocks that fulfill this criteria, and Malaysia is like 211, and Thailand is about 250. So for today's exercise, I'll just probably screen, Singapore companies or maybe Malaysia. So let's say I click on Singapore. So this is the whole list of stocks that is coming out. So I will take a look at every single one of them. So the first thing I do, there's a few ways you can do it, okay? The first thing that I always do is I look at the businesses, okay? So let's say, for instance, MM2 Asia. So MM2 Asia is, I believe, is a production company, and recently they actually going to buy the Golden Village. So I do not know how much percentage Golden Village is going to contribute to their total revenue. But if it's a huge chunk, probably it's a good companies to look at, because movies, cinemas, they are generally more recurring in nature. Okay, so now we look at this example, maybe Kim Lee, the coffee shop business. So when I look at the company, I think about it, okay, coffee shop business. During crisis, do people still visit coffee shop? My answer is, I believe your answer is also yes. So during crisis, people also visit coffee shop, and they still have to eat certain things. So to me, it's a recurring business. So I'll take it, I'll put it aside first to go for further analysis. So maybe like healthcare business, UG Healthcare. So healthcare business are more resilient. So I will take this company out. I'll filter it out. Companies like maybe GSS Energy. I do not know. I'm not sure whether what is this company doing. So maybe I take a look. Okay, I open so I just search GSS Energy. Usually I search by this GSS Energy Investor Relation. So if you look, okay, now GSS Energy Investor Relation. So I click on the Investor Relation. This is how I find all the information about the company. So what I usually do is I will go under the Investor Relation. Okay, if possible, I'll just download the annual report, which is the publication over here. If not, I will go look at our business. So I'll look at what's their business. It seems like the website is not working. Let me refresh a bit. Okay, why is it not working? Okay, I'll go to the about us. I'll see what kind of business this company is. So I look at them, it's like precision engineering business. You can read it from here. This is the whole group. It doesn't tell much. Let me look at maybe our business. So let's say oil and gas. Oh, they got oil and gas and precision engineering. So I look, okay, as part of the overall growth strategy, they got onshore oil and gas production and exploration. So basically, they are production and exploration business. So usually such businesses are very cyclical in nature, and they don't tend to be recurring. Okay, and they are very dependent on the oil price. So for such company, usually what I do is I avoid. So I may not be looking at this company after I do I screen it out, then I look through this company. Okay, I don't like this business. So maybe I'll go to another business. So let's say this company, Health Management. So let me see, is there a company named Health Management? So same thing, Health Management, Investor Relation. Oh, so okay, so this company is called Health Management International. So I'll take a look. What kind of business is it? Oh, looks interesting. Oh, okay, I think I know this business. So basically, this business owns hospital in Malaysia. So all of us know medical industries, they are generally more recurring in nature, and you don't bargain with the doctor. Okay, if the doctor say you have a tumor, you need to pay, 1 million to cut the tumor. Eventually, I believe you have to pay it because it's life-threatening to you, first thing. And second thing is, when you bargain a doctor, can you discount 50%? Your doctor will probably cut half the tumor for you, right? So you may not want to bargain. Okay, so the purchasing power is in the bargaining power is at the doctor side, at the business side. Okay, so I will look at this business. I'll put it into my further to analyze list. Okay, so let me move on to maybe page 2 to double check. Or probably let me move on to the Malaysia company. Okay, so now I move on to Malaysia company. So maybe companies like BP BP Plastic. Okay, so let me see. Look at BP Plastic investor relation. Okay, just take note that whatever I teach you now is the initial screen. Eventually, you still have to do more further analysis of the company. So basically, what are they? So basically, they sell up plastic bag manufacturing. Okay, looks interesting. Okay, to me is they sell what plastic bags, and let me see what are the things they sell. They sell all those plastics films and all this. So all these films like what's this over here? Right? They are wrapped around crates or maybe wrapped around food. So all these films, when you use, you have to you use one time, you cannot reuse them. So it tends to be yearly, you have to keep using it one. So it gives me the feeling that it's recurring. So probably I'll put this company in my watch to further analyze list. So this is how I look at companies, when I do my initial screen. Okay. Another thing what you can do is, okay, probably let's say this Burmese Auto Berhad. Okay. You go to investor relation. Another way is you can do is like this. Okay, so what this company do is, let me see. Oh, so they are the master distributor in Malaysia. So what I usually do is probably maybe you go to the annual report, the latest one, you click on them. Okay, just wait for a while for it to load. Okay, so what I do is to after you screen out, maybe you don't want to go through the way how I go through by looking at the business. Okay, you may want to look through at the financial. So what I do is you may want to do the same criteria, then you screen it out. Then after one by one each company, you go to the maybe financial highlights. So let me see whether this company have financial highlights. Oh, this company do not have financial highlights. Yes, now you can see financial highlights. So I want to see how's the company for the past 5 years. Is it growing or is it maintaining? So I want to look for companies that is growing and maintaining. I don't want to look for companies that decrease. Okay, you decrease 1 or 2 years. Okay, if you consecutive decrease many years, I'm very concerned. So this company have wonderful revenue increase. Okay, we don't talk about profit first. We talk about revenue. Okay, so revenue have been consistent. Seems good. I may want to put them into my watch list and take a look and I see how the companies have been paying dividends. Yep. Okay. Only the past 3 years. Actually, their profit is also growing, quite impressive. So for such company, I will take and put inside my watch list. Okay. Sorry, not my watch list. To further analyze list. Okay, and to analyze it. So these are the two ways you can do. Okay. Firstly, I just explained you can analyze, you can screen them out based on the ROE and the debt. After that, you screen them through business. Okay. If not, you can screen them through same ROE and debt, and you screen them through the financials. Okay. So now I'm done with looking how do you look for growth stock. So now let me show you an example of how can you look for maybe deep value stocks. Okay, so let's say you want to screen for companies that is very deep value. Okay, usually out of favor. Okay, so for such companies, right, you don't put ROE of 10%. You must put at least maybe you want them to have at least positive ROE, so maybe 1%. It doesn't matter whether the company makes 10% or 20%. It's just that you want them to have positive profits. Okay, so maybe I put 1%. Next, you also want their debt to equity level to be low, because when you buy net, a lot of cash in the company will benefit you a lot. Then the next thing is probably net is probably much easier. I want to screen maybe price to book ratio. Okay, less than 1 time. Okay, so all those companies, let's say Singapore companies, okay, 166 stocks, okay, they have price to book below 1 time. So I want to further analyze into them. So probably let me take a look. So after that, I want to see how good is the business is. So maybe I just can look at maybe this company KOP. Let me see what is it. What kind of company is it? Okay, so now I'm teaching you how to screen, net companies. Okay, that means companies that's low PB that if you buy it at the correct price, even though it's a lousy company, you still can make money. Huh? Okay, so what's this company about us? Okay, I think they are property companies. Yeah, property business. Okay, real estate development, not really very recurring. But they are in the entertainment business also. So let's look at probably their financials. Okay, where's their full year? Okay, let's say their full year annual report. Oh, I think Patrick asked, what do I mean by net companies? Okay, there's a few style towards investing. Okay, personally, my style of investing is more of like value growth. That means I buy into good companies and I hold it for long term. There's those what I call old school value investing, where they follows the Benjamin Graham style, which is similar, which is the mentor of Warren Buffett. So basically, they buy into companies that may not be good companies, but they are traded at either below book value or they are traded below their cash position. So we call all these company maybe there's a few names to them: deep value, net. So there's a few names to them. So just take note about it. So let's look at KOP. Maybe I want to look at the financials. For net company, it's important that the company may remain profitable. So you want to look into companies like their maybe past 5 years financial highlights that the profits, they are still making profits. Regardless whether it's more or less, you just want them to make profit. That's the screening criteria for net type of companies. Okay, if they got 1 year losing money, still okay. But if they got consecutive many years making losses, then probably those net you do want to invest in them. Okay, it will become a value trap. So let me take a look whether this company have financial highlights. So sometimes companies have, sometimes they don't have. So let me take a look. Okay, this company do not have financial highlights. Probably I'll need to take another one. Let me see. Okay, I'll screen by stock name. Okay, let's look at this company called AP Oil. Okay, this company I'm much more familiar with. Let's say AP Oil. Okay, where's the investor relation? So you can see AP Oil over here is ROE of 6.5%, very low debt level of 0.11, and it's traded below book value. So if I look at AP Oil, is about, let me see, where's their annual report. Okay, so let's look at the financial highlight for such companies. So okay, rather maintaining revenue. Okay, they have been profitable for the past 3 years, not so bad. Looks quite good. So if you look at maybe look at their balance sheet, see how strong is their balance sheet. So if I look at AP Oil, their cash position is about 38.3 million. You can see the cash and cash position, 38.3 million. Then their debt, they don't seem to have any debt. So that means their cash position is 38.3 million. So let's say I type AP Oil market capitalization. Let me see how that big cap. What's the full? Okay, so this is very interesting. So if you look at AP Oil, their market cap here is about 45 million. And out of the 45 million, 38 million is cash. So very high, about more than 80% of their total market cap is cash. So this company is a cash rich company. So this is what example of like net company. So sometimes you can buy such company either very close to the cash level or even below the cash level, okay, and the company is profitable every year, eventually investor will take note and you move up, okay. But for such a company, when you invest, right, you don't hold them for long term. It's very different from the style I'm using. The style I'm using is when we buy, right, certain companies which are good companies, we hold them for long term. Okay, for net companies, you don't hold them for long term. They usually do not have good management, but they somehow are cash rich, and eventually somehow certain ways some people will kind of unlock the value, or maybe they pay more dividend. So just take note about it. Okay. So now I've roughly go through the screening part, and now I'm going to move on to how do you look for more ideas other than using the screening. So let me going to show my face. Okay, so screening is one part that I always do. Probably I'll do it maybe once or twice a year. You don't do it quite often because the financial doesn't change quite often, but you have to do it yearly. If you do it once a year, still okay. So maybe usually what I do is maybe starting of the year, not starting of the year, maybe every April or June I will do the screening. So if I want to do 2 times a year, I will do maybe June and December. So these are the two things. You don't do it almost like maybe 5 or 10 times or 20 times a year. Don't do that. Okay. I mean, for a single market, you just do 2 times a year. That's all. Or maybe actually minimum 1 time lah. Okay. So that's for screening. So now I'm going to move on to talk about how can you find ideas in, let's say, newspaper. Okay. So for Rusmi and I, we read a lot of news. So in Singapore, we read the Business Times, the Straits Times, the Age. If from Malaysia, you read the Age, Focus Malaysia. You read the Star Business. Okay, so somehow when I'm reading these two countries, I realized the Malaysia investor community, or probably those newspaper that's writing about investment, right, are generally much more beef up. A lot more content as compared to Singapore, but it's okay. But because if you want to understand a lot of Malaysia stocks, you just look at these 3 publications enough. So when you look at all these newspaper, right, so what do you really look at when you flip? Okay, for me is I'll look for companies. I'll see what companies are being interviewed, and I'll read about them, and I will go to their website or investor relation to see whether such companies are very resilient or not. So this is to find those normal, typical value growth companies. Okay, so this is first criteria. Second criteria, I look for second things that I look for is distress. So whether the companies are like maybe they are in a sector distress. Okay, but these distress are temporary issue. So let me give you an example. So I remember in 2011, I think 2011, 2012, Thailand was being hit by flood, right? I believe all of you still can remember. In 2011, 2012, Thailand was being hit by flood. So when Thailand was being hit by flood, okay, so I start to realize that, when they were hit by flood, right, you realize that all these floods, right, are temporary issue, but it hurts the business at that point of time. So what I want to do is I want to wait for all the financial results for all those companies that have their companies in Thailand being affected by the flood. Okay, and I want to see them reporting impairment losses, because they have to write off all the losses that they have because they lost their factories. So once this is being recorded, they lost all their share price will start plunging. Okay, this is the first thing I look at. And when their share price start plunging, right, you must have this idea. You must know that when companies run operations in, let's say Thailand, and the flood hits, they are usually covered by insurance. Okay. And of course, their business will temporarily be affected. But you know that all these are temporary issues. So you have to look in there and buy them. So I bought into this company called Armstrong. It was being hit by flood. Okay. After that, we bought into them. They report losses, report impairment. After they write back the gain because they claim back the insurance. And the company start turning around. Business start doing well. And eventually, the stock price actually went up. And the founder actually privatized the business. So this is one way you can look at. Okay. Second is third is when you read the newspaper, you can look for informations like maybe supply and demand issues. So I like to look for companies that in a industry dynamics where the supply is usually limited, but the demand is very high. Okay, so this is what I usually look at. I don't look at oversupply issue because I this one lesson that I learned, because if you oversupply issue, I can last for years and it may drag. But if you look for shortage issue with limited supply and high demand, usually the share price will go up. Not sorry, the share price, the unit price that the product that they're selling will go up. Because when demand more than supply, prices will go up. When supply more than demand, prices will go down. So always remember this. But when you look into the newspaper, always find for demand more than supply. So this is what I usually look at. Okay, so these are all the information that I usually look when I was reading a newspaper. Okay, and I also want to read interesting newspaper. I usually like to read, management interview. That's the best. Okay, when I read management interview, right, because certain words that the management says, right, reflects the character in them. Okay, so I've read of this Malaysian guy. Okay, they so-called call him a top investor, and I also read about an interview about another top investor. Okay, one investor talks about how he looks for ideas every day. He spent his life, digging for ideas, reading things. But I see another so-called top investor, and he talks about how flashy his car is, how he likes to buy cars. So there's a difference between the value system of both of these investors. So if you ask me, right, if both of them are listed, right, I will have faith to invest in the one that he's talking about in doing his work, instead of the one that always talking about cars, talking about buying cars, how he make the money from the investor after he took his money and go buy cars. So these are the things that I look at, the value system in management interviews. So when I read newspaper, I like to look at management interviews. So once you find good management, okay, with good interview, because management, what you want to do is you want to look for capital allocator, people who can allocate the money very well. So all these places can help you to look for them. Okay, but of course, you also must take note that I've known of people or management who knows that you like to read articles or maybe shareholders letters, just like how Warren Buffett write it. So I know of listed companies, right? They write letters in a way of styles, right, that it seems like Warren Buffett style investing. But don't be fooled by such management, because I can tell you, a lot of management out there, they just want to write good things. Okay, this one thing you have to be careful. I've read of 3 annual report before. I've in my course, I've shared 3 annual reports, and I told them, you read all these 3 annual reports, they are all very well written. They write the Warren Buffett way. But out of these 3, only one is the one that is truly doing it. Okay, the other 2, like, their behavior and their words do not tally. Okay, doesn't match. So what we want to do is, you don't track them by the way they say. Okay, they can say the thing, but you track their behavior. When they say, did they do it? Okay, if they say it, but they do another way, then I got question mark about such management. So you have to always read, give them a benefit of doubt, but don't fully trust them, and track their behavior first. Okay, the best thing is to read all the past annual reports and to understand how their behavior have been. So these are the ways what I do when I read news. I went to analyze. The next thing is what you can do is you can look for mastermind group. All right. What I mean by mastermind group is like a group of people with the same mentality, same skill set. Together, what they do is every 2 months or 1 month, they will maybe share ideas together. Okay, this will help you to reduce your workload also, and also to find ideas faster. So for Rusmi and I, every 2 months, we have a group of investor friends that we meet every 2 months, and we share ideas among each others. Okay, and that's where some of my good ideas also came out from there, because everybody are sharing the ideas. But of course, everybody must be on the same level to share. Okay, you don't want people to be from a different level. You want all of them to be same level. So you can do very well when everybody do the same work and contribute together. And also take note that the group of this mastermind have to be small. I think at most maybe 5 people. You don't get more than that, because the more it is, it becomes too many opinions and too many people talking. It becomes a hangout place, but instead of doing more objective work. So just think about it. Okay. So without that, I think I've been talking about half an hour about how to find ideas, investment ideas. So now I'm going to go right direct to all those questions that has been submitted to us early on, or the past 2 to 3 days, and I go answer them right now. So let me take a look at probably one of the first few, like Chi Fen. He actually asked, can we say on the equal level between a consistent or sustainable low P ratio of, let's say, below 10 or even 15 times versus a low PB ratios, okay, let's say 70% or below, is relatively more important. Okay, in other words, P ratio is relatively more important to watch out than PB ratio. Actually, personally, I felt is you cannot separate that, because I've invested in companies that I invest based on PE and I also invest based on PB. Okay, and both make me money. Okay, I cannot say that, you know, PE is better than PB, PE is better than PE. I don't really do that, because if you do that, right, you'll reduce your number of opportunities will reduce. Okay, because you only can look at one thing. For me, is like what we do when we in fifth person. Fifth person means fifth perspective. It means multi perspective. We have to absorb all the same perspective. Like value investing, there's a lot of ways to do it. Okay, there's net investing, deep value, there's value growth, there's growth investing. What we do is we embrace all this, and we, so that your new universe of opportunity is bigger. But just remember, just don't overpay for anything. That's all. Okay. So next question is by Daphne. Okay, Daphne actually asks, I'm a new investor waiting for the right opportunity to start investing in the stock market. For the past years, the financial news and people like Robert Kiyosaki have been saying that, you know, the stock market is about to crash, right? And it's coming really soon. I tell you, you always hear that, okay? I know that the best opportunity would be to invest in great companies when the stock market crashes. However, it is hard to tell when's the next big crash is coming, or will it ever happen. I'm stuck in a dilemma, afraid that when I start to purchase my first stock, the stock market crash, and it will probably take me a long time to rebound my investment. So do you have any advice on this? And should I go ahead and start investing wherever there's an opportunity now, or because I know that investing is a long-term gain, and what if the stock market crash halfway when I'm not make any gains? Okay, my take is, do not be too eager to invest in the stock market when you just started out. Okay, it's very, very important to get yourself educated. Okay, know how do you manage risk in the stock market? How do you analyze the company? All this you have to done first before you start investing in the stock market. I rather you save up your money, okay, and learn how to invest. But if you really want to invest, right, your cash position increase and decrease, right, is dependent on the market condition. If the market is at probably overvalued, I will probably holding 60% cash. Okay, I won't fully exit from market. Okay, I don't fully exit from market, because you know why? Because overvalued market sometimes can last a long time, so you may miss an opportunity. For what I'm doing is, it's just like I got more cash position and I wait. Okay, but when the market is crashed, my cash position become lesser. So you can see my cash position will always up and down, but you never see my cash position become 100% cash or 0% cash. No, I still will keep some cash. Okay, but it's just that it's either 3% or maybe 60%. That's all. Okay, so this is what I usually do. Okay, and she asked, do you recommend investing in the STI, the OCBC Blue Chip Investment Plan? Okay, so my take is, investing in index low cost ETF is good. Okay, generally if you know about stock market in the long run, it will go up. But to buy into the index, you must buy at the right time. You don't buy every single month. Like I don't like to do the average cost style. That means every single month I keep buying the index. I don't do that. Okay, I look at the condition. So if the market is crash, or maybe during the August 2015 to January 2016, the STI and the Hang Seng Index actually crashed about 30% or more. Okay, and that's where it's a good opportunity to buy, because they are traded below 10 times PE at the point of time. So I look, and moreover, when I look at the Hong Kong market, it was traded at 97, 98 Asian financial crisis valuation. Okay, it really gives a no-brainer to buy into the index. So people will ask me at that point of time, I say, okay, you can look at index. If you don't know what to buy, you buy the Hang Seng Index. Okay, and now the index have recovered more than 30%. Okay, recover back to the norm. But I won't sell, because if let's say I buy at the point of time, I'll hold it for a long term, because you know that index investing is long term. You buy and hold long term, but you don't buy it every single month. So I don't do that. But there's some people who advocate that. There's no right, no wrong, but that's not my style. Okay. So William actually asked, with the most stock in the bubble territory now, how do we find stocks that are still worth investing? Basically, now I would say that we are not in bubble. We are just in the in the Asia region, it's more of like slightly above fair value. Very slightly a bit over value, just a bit, not much. But in the US, is going to hit the bubble zone, but not yet there soon. At any point of the market cycle, you always can find undervalued companies. It's whether it's easy to find or hard to find. So at this current situation, it's definitely hard to find undervalued companies. Okay, it takes probably last time, if I want to find undervalued companies, maybe out of 10 companies I flip, I maybe can find 5 or 6. But right now, out of 10 companies I flip, maybe I only can find 1 or 2. Okay, but you still can find, just that you have to work even more harder. Okay, but during crisis, your jobs are much easier. Okay. So Georgia actually asked, what do you think about the forever portfolio, which means that buy and hold dead? Okay. Personally, I still buy and hold. It's case by case basis. Okay. If I'm buying a good company, I usually want to hold them for long term, 10, 20 years. You can look at the company compounding. So let's say if you look at maybe Amazon. I recently was reading one very good investing article. They was talking about Amazon do not pay dividend, but there are good companies that are spending a lot of money back into the mode. So if you bought Amazon in 1999 and you hold it right now, right, your average compound annual growth rate is 36%. Okay, but imagine you have sold, right, you won't get your 36%. So it's case by case basis. But if companies that are fair companies, that's why you must know how to gauge the business. You must know how to gauge good business, bad business, and fair business. Okay. So if the bad business and the fair business, I usually sell them when they hit their value. Okay. For the good business, usually when they hit the value, the fair value, I'll probably get back my initial capital. I'll let my profit ride all the way. Okay. If there's opportunity again, I will just buy them back. That's all. Okay. Because I know the good company will continue to perform. They tend to have very wide moat. And they got good management, they allocate capital well, eventually they will still perform. So I don't worry about that. Okay. Okay. Next is Stanley actually asks, how to know when is the right time to sell after purchasing a stock? So it boils down back to the valuation method. You must learn how to value the company. Okay. So when you buy into a company, you already know how much the company is worth. But as the time goes by, the company will get better and better and the intrinsic value move. Okay. And if the company get over the intrinsic value, okay, if it's a good company, usually I don't sell. But if it's a fair company and it goes over the intrinsic value, I will sell it off. So that's how I gauge. Okay. So David asks, besides fundamental analysis, what technical analysis method you use to time your buy and sell? Okay, basically, I do not use technical analysis. I'm a full fundamental person. I focus a lot on fundamentals. I never use technical analysis on stocks before. Okay. So he also asked, what is your view on those stocks that is paying high dividend yield, which is about 10 to 12% for the past 3 to 5 years? For me, I don't look at companies that pays very high yield, because to me it may not be sustainable. Okay, and usually if the company really do pay very high yield, eventually the yield will drop. Okay, but if you can consistently pay for the 5 to maybe 10 years of 12%, probably that company yield may not be sustainable. I don't think it's sustainable if you continue to pay, unless the shares is depressed and nobody knows it, and which is unlikely. Okay, if it's paying so good yield and the company is very good, eventually somebody know it and the dividend yield will start dropping. Okay, so what I do is I look for sustainable dividend payout ratio. So let's say if the company pay maybe 30% out of its profit as dividend, okay, I want to look for sustainability. That means they all continuously like maybe 30%. So moving forward, if the company's profit keep increasing, right, and they continue to pay 30% out of the profits, then eventually my dividend will also keep increasing. So this is what I look at, sustainability of dividend, not the yield itself. Okay, so take note about it. So Jamie asked, which website is useful to screen for stocks with increasing EPS over the past 5 years? Usually the screening part, I already told you I use CIMB, but if you want to do the past 10 years one, you either can go to their financial and reports. If not, you can maybe use Share Investor. Okay, Share Investor can be used for Singapore and Malaysia, but just take note that don't fully rely on Share Investor, because I've used Share Investor most of the time, and I realized sometimes their data may be inaccurate. Okay, that's what was one company that let's say Daibochi. I look at it, I was thinking, oh, this company is cheap, selling at 9 times, but when I actually did the calculation, it was selling at 25 times, and it's very expensive. And why is that so? It's because Share Investor forgot to account the bonus share issue. So sometimes you must know third party players, they do not they may make mistake. Okay, I have a screenshot of all these third party players that they make mistake. Okay, so I just keep it as a proof to tell people that you cannot totally rely on them. Okay. Gregory actually asked, if you talk about investing overseas, what website will be good to use to look at stocks for companies? Like maybe the US got the Guru Focus, Morningstar, and Jita. He was talking about Malaysia, China, Thailand. Malaysia, you can use Share Investor. I don't personally invest in China. As for Thailand, I haven't found any good website yet. So at this moment, I still doing the old school way of downloading the annual report, reading them, okay, and visiting their business. Okay, so I'll do one more. Martin actually asked, how do you value a REIT? You value a REIT using price to book ratio. That's the simplest thing you can do. Okay. Okay, now let me move on to the question that is live right now. Okay, let me take a look. So Patrick actually asked if Kimlee is classified as a cyclical consumer. I do not service, is it? I think you typed wrongly or something. Then it can be risky to get into it if it's at the high end. Am I right? I still do not know as I know it's their coffee shop business. Whether is it cyclical or not, but I think food business are usually they can maintain the same revenue every year but I don't think this coffee shop business, I think it's recurring in nature. I don't think it's very cyclical. So just take note about it. Or maybe did I read the company wrongly? Okay. So Thomas actually asked, can I know how to read the notes to financial statement regarding the related party transaction? Personally, every time I read the related party transaction, I want to see how the money is flow. So that's the objectives you want to see. And usually if a large percentage of the revenue or maybe the cost is from the related party transaction, then you have to take extremely care and ask the management why the business doing with these two, because it can easily prop up the revenues or maybe prop up the net profits. So you must take note about that. So that's what I usually look at. So Luan Bu actually asks, why don't you use shareinvestor.com where all the data are consolidated? Yes, I still use them, but I use them for initial screen. I don't use them to do and report, because I use them almost day in day out, and I have multiple screenshots, more than 10 or 20 screenshots shows that their figures having issues. Okay, I just use them for initial screen. I don't use them to analyze company. Like I said, the Daibochi case, in their fact sheet, they states that it's 9 times PE. And if I bought it based on what I believe that is a 9 times PE, without checking the way the data is really correct, right? I would have bought an overvalued asset, because the company, if you adjust back for the share issue, they actually are traded at 25 times PE, and that's not cheap. Okay, so I don't rely on third party. I only use them for initial screen. So take note about it. Okay, Andy asks, there's 166 companies. How do you decide the companies to look into when all the criteria are quite identical? Basically just now what I already explained to you, how do I look into them, the business, look into the financial and further screen down to them. That's all. Okay. When you do that method, you screen down to just a few stocks only. Then after that, you just focus on that few stocks. So Vincent asks, I screen for stocks using PB and debt to equity ratio, then check the screen company individually for those which have a majority of assets in cash, investment grade property. Is there more efficient way to screening for all these assets? I think you are, this is the exact situation you have to do it. Okay, which is, you already mentioned it. So far there's no efficient way. Okay, you still have to look at that report. Okay, if you think about being an investor by not looking at that report, I think that is, you cannot do that. Okay, because you must treat the annual report. Okay, it's like you go and fight a battle. You need a sword. You need a sword to fight a battle, and your annual report is all your sword. Okay, it's your weapon. So you have to read the annual report. You cannot escape from the annual report. So take note about it. Okay, I'll do one more question before I move back to the submitted questions. So Wei Kiong actually asked, how do we get the P for the index? Basically, you go to the use your mobile phone, okay, your mobile phone, Apple or Android phone, and you download this app. Okay, this app over here. You can see this Bloomberg app B. Okay, from there you can look at the market index. Okay, so let me show you right now live. So this is very important. Okay, take a note. This is how I gauge whether the market is overvalued and undervalued, and this is how my cash position increase and decrease. So right now my cash position is about 28%. Okay, in January 2016 I was about 3%, and a lot of stocks have moved up, and I start clearing my position, and now I'm back to 28%. So if you look at here, you can see the index. Okay, so let's say I click on the S&P 500. Okay, so you see S&P 500. Okay, so if you look at here, S&P 500 is at 21 times PE. Okay, so the US bubble region is usually 25 times PE. So now they are at 21.7 times. Okay, so it's rather close to the bubble region, but not yet. Okay, so just take note that the overvalued market can move on for many years. So don't be fully out of the market. Okay, so next is, okay, so next is maybe Liang Ho. He said, my question is, how do you calculate the intrinsic value of a stock? The easy way and not the complicated way with all sorts of formula. If you want the easy way, it's very simple. You must use PE, PB, price to cash flow, price to sales. So you use the multiple valuation. As in, these are called multiple valuation. Okay, and when you do that, it's not, you must take note certain companies you can use PE, certain companies you can use PB, but not all companies you use PE. Different type of company require different type of valuation. You must know what valuation for what company. So that's very important. So take note about it. Okay, so Ivan asked, what is your opinion on the robo-advisor platforms like StashAway and Smartly Local and Betterment and SneakFig in US? Okay, personally, I haven't looked into the robo-advisor yet. I have not going to use their thing, but at this moment, I felt that they are still at the early stage. Okay, they are still at the trial and error, the early stage. You still take some years before it becomes very competent. Okay, and of course, I personally do not really trust robots because, firstly, I feel that the business itself is, especially the business and the investment world, are very dynamic in nature. So things move. So rules also change. So if you set a certain rules to this robot, but as the time goes by, all this game, let's say you talk about stock market as a game and the rule change, okay, then this robot have to learn the rule again and reabsorb again. Okay, but when the rule change, it may cause a big drop to your portfolio. So you never know what will happen. So I don't really trust robo investing at this moment until I see that it's getting better. Then probably I will be out of job now. Okay, but I see out of job by that time. Okay, so Ivan also asked, what are the key indicators to determine undervalued companies? Are the tools to do a market scan for the undervalued stocks? Key indicators, all the valuation methods, your PE, your PB, your price to cash flow, all these are your key things to see undervalued, okay? But take note, doesn't means that PE of less than 10 is undervalued. Sometimes it can be expensive. And PE of 15 is expensive. But sometimes it can be cheap. Okay, I bought companies at 13, 14 time or 15 time PE, and those companies are double up, triple up. Okay, so just take note about it. So Thomas asks, when doing research on companies, do we study its overall industry? If so, where do we look for such information? Yes, if you can get all the competitor, you go study all of them. Then you will get an overview of the whole industry, how is actually the industries operate. Okay, where can you find the informations of all their competitors? You can look in let's say, where is it? Okay, you can look for analyst report. Okay, to look for all their competitors. Or if not, sometimes you can go to Financial Times, you type the company, you click on business profile. Okay, never mind. Since I'm here, I'm going to show you how I'm going to do it. Okay, so now I'm going to show you how do you look for competitors. Okay, let's say maybe let's say BreadTalk. So I click BreadTalk. Okay, BreadTalk. Can you see? Take a look here. Oh shit, I didn't turn the screen. Okay, give me a minute. I'm going to share my screen now. Okay, I'm going to share my screen. Please type yes, you can see my screen now, because I'm going to show you how do you look for competitors. Okay. Yeah, type yes if you can see my share screen with you right now. Okay, good. So I see most of you can see my screen, so I redo everything. So now I go to market.ft.com/data/equities. Okay, so I'll come to this screen. I'll type maybe BreadTalk. Okay, BreadTalk. I'll go to the company. Okay, so I'll click on BreadTalk. Okay, this is one way you can find competitors. Okay, I'll click on profile. Can you see profile here? Okay, I'll click on profile. So you see, they actually done out peer analysis. Okay, so this is the possible competitor to BreadTalk. But just take note that it's not apple to apple. So you still have to go to every of these companies' investor relations to see whether it's apple to apple with BreadTalk. Okay, so this is the first place you can look for. If not, you can look for analyst report. That's the fastest way. They will find a direct competitor to them. Okay, if not, I'll usually come here. Like if you look at this company called JetFar, I don't think it's apple to apple with BreadTalk. So if you look at JetFar, I think it's not this company. JetFar Investor Relation. Okay. This one. Oh yes. So you look at their business. They are in like dairy, animal proteins, and even consumer food. So what kind of consumer food they are in? They are in those FMCG. Okay. But if you look at BreadTalk, right, BreadTalk is in the restaurant business. So you must compare restaurant to restaurant. Okay. So this one is not apple to BreadTalk. Okay. This is probably a pair. Okay. So that's why I share with you this information, but you still have to individually go down to each one of the company and look whether it's apple to apple with BreadTalk. Okay. So now I'm going back to. Okay, so I'm back now. So now I'm going to go back with the questions. So Marcus asked, how did you train yourself to be a value investor? Did any particular book or investors inspire you? Okay, when I just started out, I look at trading book. Okay, because every time I see investing, our thought is trading. Okay, and that's what I learned when I'm watching the Hong Kong drama. Everybody's like trading, buy and sell. So I start to buy trading book. I look at them, and when I look at them, I seriously do not understand. Okay, and my friend told me that the world one of the world richest guy is called Warren Buffett, and he do investing, and he do this style called value investing. So I'm very curious, this guy do value investing, and and how do he do it? Since it's already proven work, why don't I just follow their methods? And that's how I start reading about value investing. And the moment I read, bam, I felt that it's very easy to understand as compared to trading. That's why I get sucked up to the this method, and I eventually I'm going to focus my whole life just doing this method. That's all. Okay, so that's how I got it. So he asked, as a value investor, what's your thoughts on the current US market? Is it still possible to find undervalued company? I say yes. At any type of the cycles, you can find undervalued companies. Just that the current market conditions is not favorable. That's all. Okay. So Terence actually asked, for investment beginner, what should be my priority in choosing? Can you hear me loud and clear right now? Hello, can you hear me loud and clear right now? If yes, please type yes. Okay. Okay, sorry. I accidentally hit the mic, so the wire went out. I'm so sorry. Okay. So where was I? Okay. So okay, I just go back to the last question. Okay. Terence actually said, for the investment beginner, what should be my priority in choosing the right stock? Choosing the familiar industry, or simply choosing the best available company in the market to invest in? Is there any other element I should be aware of? Okay. Firstly, when you invest in companies that you know. Okay. When I just started out investing, I focus on companies that are within my circle of competence. Okay. So I go into companies that used to be my customers, and they have all been privatized. Okay. And I go to easy sectors that is easy to understand, like F&B. So that at the point of time was very cheap. So that's how I look at. Okay. So let me move on to the next question. Okay, probably I'll go to the live questions right now. Really actually say that some report I'm seeing saying that value investing is not going to work anymore in this era. Do you think it is true, or whether value investing method is not work anymore? Personally, I think the method still works. Okay. If you look at value investing, has been there since, I think, more than going close to 100 years already. Okay, and Buffett have been telling people that do value investing, and a lot of people still not doing it yet. So I personally feel value investing still works, and to me, it still works for me. Okay, so that's why I didn't alter it. Okay, let me look for questions. Okay, what? Okay. Okay, I think you have to retype all your question, because when I restart the systems, everything went off. Okay, so let me go back to the other questions that is submitted. So Helen actually asked, do you add a margin of safety to your buy target price? If yes, what are your MOS like? That means your margin of safety like. Okay, standard and fixed percentage at, let's say, 110%, or for all stocks, different margin of safety across stocks. Actually, the margin of safety is like a discount to the intrinsic value. Okay, it's case by case basis again. So if for good companies, right, I don't mind a lesser margin of safety, maybe 0 to 30%. That I would say great companies, good companies with good capital allocator. Okay, but if companies that are fair companies, that means they're not so good, the management is also okay only, probably I'll give them, I need a 50% margin on them. So this is how I usually look at. Okay. So, okay. So let me see. Richard says that the local bank stocks have gone up quite a lot since last year. Example, DBS Holdings. How do you find out if they are now overvalued or still potential buy in them? Okay, you look at their PB ratio. Banks are simple, just value them based on PB. Okay, you find what's the sector's average PB or the individual company's average PB, and you see whether they are traded either below or over average PB. If they are traded above the average PB, most of the time they are at fair or maybe overvalued. Okay, so this is how you look at. Marco asked, actually recently F&B company Chipotle have been hit by some food safety issue. Do you think it's a good time to look at this company? Yes, you can look at them. I think it may be an opportunity, but you must know that whether the thing is you must see how is the impact. For F&B business, I'm rather concerned when it comes to food safety. Okay, if people lose confidence eating their food and felt that their foods are poisonous, eventually their business will go down. Okay, but if it's that's why for such a company, it's best that you can go down on ground and see and ask people's opinion. Okay, but Chipotle, I think it's in the US, so it's rather hard unless you want to fly over the US and take a look. Okay. Tiffany says, how do you define fair and good business? So I define good business maybe like companies with very good management. Okay, with probably a very good business which is recurring in nature. They have a very big economic mode. I call it white mode. Okay, so these are what I call good businesses. With white mode, simple business, recurring in nature, with good capital allocator management. Okay, so this is what I look at. Roy actually asks, hi Victor, for the April example, how do we verify the cash is genuine there? We see many cash-rich China companies going down. That's the reason why you must see the behavior of the management. Usually you realize the especially those Chinese listed companies that gone into fraud, right? They tend to always raise money out of the capital markets. Okay, so they have this criteria. So if the company already have cash but consistently raising cash, then I'm very concerned about such companies. Okay, so that's what happened to the Chinese listed companies. So basically, their cash are not there. You look at this company called, what's this company? Irata. Okay, they are caught for fraud. Okay, so the company is cash rich, but they still raise like 14% convertible bond. 14%, that's how high. Every year the company will make more than 14%, then the company can make money. I mean, the shareholder can make money. Okay, that's very high. And at the point of time when they raise, right, the stocks, the interest market is very low. It's about less than 1% or maybe 1 or 2%. Okay, you can borrow from the bank. Why you don't borrow from the bank and you borrow from the capital market at 14%? You think about it, something is wrong, and somehow you're in cash position. So basically, if you're in cash position by right, you can borrow from the bank easily, and yet they can't. So that means something wrong with their cash. Their cash may not be there. So that's how you should look at. Okay. So Jerome actually asked, what formula do you use for valuing a company? Like I said, you can use PB, PE, price to cash flow. Different companies require different kind of valuation. Okay, you have to understand the company first, then you can know what type of valuation can value the company. That's the most important thing. Okay. Victor actually asked, in portfolio rebalancing, we tend to sell those outperforming stocks and relocate the money to the remaining less outstanding stocks. Isn't that selling the winner and put the money into the loser? Yes. Okay. Basically, I don't do that. Okay. What I do is I always keep my winner. Okay. I usually clear off my losers. If I know I make a mistake, I eventually sell the loser. Okay. I try to keep the winner. Unless the winner get a bit too overvalued, I'll sell them. If not, I'll always sell the loser, keep the winner. I will not sell the winner and average down in the loser. I will not do that. Because no point compounding your losses. So let me look for more questions. Chi Leong actually asks, how do you evaluate software based business? Usually margins are high and low asset. Software based, probably if they are recurring in nature, you can use PE. Okay, that will be simple. Okay. Chong actually asked how many stocks in a portfolio for diversification. Okay, so if you're a retail investor, I think 10 to 15 stocks will be quite good. I don't believe in, holding 100 stocks. And you must know you're already working and you come back, you're very tired, you still have to hold 100 stock, you want to monitor 100 stock, that's a lot of work. I think 10 to 15 stock will be good. But just take note that when you just start out investing, right, you don't immediately invest to 10 to 15 companies. It takes some time to build up to 10 to 15. Okay, so take note about it. Because a lot of times when people got a pool of money, they are very eager to invest in the company. Okay, so take note about it. Okay, I will answer probably maybe another 2 more questions and I will stop it. So Go actually asked, what do you think about Design Studio? This is one company I used to invest in, and lucky that I make money out of them, but I personally don't really like them because as time goes, I get very well versed with businesses, and I think their business are not recurring nature, and the managements are just fair management, not the very tip-top management. Okay, so I'm going to answer one last question. So Natarajan actually asked, how do you get to know the latest news as an early bird? For example, this is happening for Rosely today. Usually all these are insider news, and I really do not know. Okay, unless you know somebody in, and if you know somebody, you also cannot act on the insider news. Okay, so you may get caught or get fined by getting insider news. So I usually don't do that. These are one-off events, right? You can't be always so lucky about it. Okay, so I've come to the end of my Q&A, but